All right. So when it comes to bros, let them clear this $84.50. And if they can clear it, well, we can average up on this, maybe add perhaps another 0.1 to 0.2% and complete the entire positions all at once. So this is for bros. And let's see. Hope the plan for bros is clear, by the way. Dutch bros, they're testing the ER AVWAP here from this gap up. When I say ER, it's AVWAP coming from the earnings gap up candle right here from Feb 13th. So let's see if they can clear the intraday VWAP. If they do, good for us. It's going to offer us a great opportunity for new positions. So a lot of questions about PLTR yesterday as well. Should we buy the dip and what we need to do and all that? Well, try not to buy the dip at untested levels. Let the buyer step in first. This thing just kept on rallying and rallying and rallying, and yesterday's candle was not pretty. Today opened with a gap up, and now they're having a continuation to the downside. You might think this is low, but in reality, let the markets tell you that the buyers are interested in buying that particular level. Wait for them to at least recover the 5-day moving average. It will be better for us to enter right there. And if you go to the daily, we are kind of breaking down under the 20-day moving average as well. I would much rather prefer this to come down towards this $84, towards this 50-day moving average before getting involved in this name. Or let the buyer step in and start pushing it back up again. Maybe perhaps about this 111 to 107-ish zone. About that, we'll be interested. Not at this moment, not right now. It'd be better to just leave it alone for now. So this is for Palantir, and all I'm talking about is swing trades to the upside, by the way. That's what we're talking about. You can short this to the downside. We're not talking about buying puts. We're talking about if you want to buy shares on this for the swing trading purposes. It's not the right time, not the right time to do it. We might think we bought the bottom, but in reality, it's just you're gonna face a new lower low, new lower low, new lower low, making like lows after lows after lows down the line, increasing your drawdown, and in reality, it's just not worth it. It's just not worth the risk, and it's just not worth the drawdown. It's just gonna waste your time. So let's focus on bros for now. This is the only thing which is near our potential average up zone for now. If the opportunity is provided, we will do it by today. And MasterCard needs more time. MA needs more time. And we're just going to give it as long as it takes. So sizing is not that far off. So we'll see. Bros needs, let's just set some price alerts above this ORB lows right here at 84.72. If they can close 5-minute candles above 84.72, then we are interested. Then we are interested and we'll add more to it. And Angelo, I can see you're here. You asked me a good question about VIAV. That is also a good looking chart. The only problem was you already identified it, was it's under the declining 5-day moving average. If you go to the daily, you can see the trend on the daily is to the upside. We got a positive 20-day moving average, positive 50-day, positive 200. The trend in daily is still to the upside, but that doesn't mean it's ready for us to establish new positions. When you go to the shorter time frame, this blue line which you see on the screen, let me zoom in. This blue line, which you see on the screen, is the 5-day moving average, by the way. That's going to tell us the last 5 days worth of momentum. As you can see, the last 5 days, the momentum is favoring the sellers. At this point, there is no reason to rush into any positions at this moment. Maybe perhaps let them clear this $12.13 and let the 5-day moving average either flatten out or start sloping to the upside. That'll only happen if we see a series of higher lows and higher highs in the last 5 days of price action, by the way. If you don't see it, there's no reason to try to call the bottom and get involved at this moment. Give it some time, then we'll deal with it down the line. So 12:30-ish, that doesn't mean remove this completely off the watch list either, because the daily is still in an uptrend. So if the daily is still in an uptrend, better to keep it on the watch list. Now, what we are doing is waiting for the last 5 trading days, for the buyers to step in. Once we see that happen, then that makes sense. Then that's our entry, because we need not just the buyers to be in for the last 20 trading days, we need buyers to take control of the trend for the last 5 trading days as well. That's what we're waiting for. So got a good eye and keep it on the watch list. I will add it to the watch list as well. I'll set some price alerts right here at $12.30. If it kind of triggers the price alerts today, great, we'll buy it today. If it triggers the price alert 1 week from now, we'll buy it 1 week from now. There's absolutely no rush to buy it right now at the bottom or whatever it is. Again, goal is not to buy the bottom, goal is to buy the strength. We'll wait and see how it does. And we discussed about SOC. SOC is down almost 3% today as well. So we'll go over it briefly and see what's going on. Cheers to that. Insanely slow today. What the hell? Let me stop sharing really quick. See what's happening. Can you guys see the screen? What's going on here? Right, so my trading view is stuck. Completely blocked. All right, just give me a minute. Let me just reboot the trading view and see if everything get fixed automatically. Reload. All right. So let's, as I was saying about the VIAV, hope that makes sense, Angelo. So that's what we're looking for when the trend is to the upside in the daily time frame. We just add that stock to the watch list and wait for the things to work out on its own in the last 5 trading days. Let the 5-day moving average correct itself. We'll be having more than enough time to mess around with it down the line. And let's go back and see trading view. All right, looks like we are properly. Share the screen right now. Should be good to go. All right, so can you guys see the screen now? We're good? All right, beautiful. So the next one is, yeah, let's see how the bros is reacting here. And if I add more, I'll let you guys know. And Yum is doing good, nothing to worry about. MA, give it some time, let it set up. Depends on the 5-day moving average. We'll deal with it. And yesterday, we did something once the live stream was closed in the later part of the day during the closing bell. We closed our entire firm position, AFRM. So we entered somewhere around that $83 and we averaged up in the current cost basis was somewhere around 76. What we did was we completely closed off our entire positions yesterday on the runners at around $76 and change. We closed some of our positions at 80 to take some profits off the table, and we closed others at the $76. And total trade was just 1.5 hour trade. Well, still a decent one, but glad we did because the firm right now is sitting somewhere around at 73 and change, so not worth it. So that and HWC is the other one which we completely closed off. And those are the two trades which we removed off from our portfolio. Right now, the only active positions we got is MA, which is the MasterCard, and Bros. Both are starters position. The YUM completed ones. So these are the three swing trading positions which we have active on our portfolio at this moment. So MA and Bro, if it stops us out, I'm generally not worried about it at this moment. But YUM, beautiful chart and have a little bit of hopes on it because of the higher probability of the same working out in our favor. I'm going to leave that YAM on until and unless the trend tells us otherwise. There's no reason to micromanage it at this moment. We'll get towards this 150, 152-ish and change, and then we can deal with it down the line. So we're not averaging up on bros now. Why? Okay, pretty simple. So we can see that orange line right here. That is the ERAV VWAP. And just because the price is getting near that ERAV VWAP doesn't automatically mean average up. So we need the price to get back over the intraday VWAP. So which means the buyers from today's trading session needs to get back the control. Right now, they're under the VWAP, which is telling you for today, sellers are in control of the trend. When the sellers are in control of today's trend, we're gonna take it as what the markets are giving us. If we need the buyers to take back control on an intraday basis before establishing anything, I don't want to buy anything at this moment because we don't know if it's gonna pull back all the way down towards $81, or we don't know if it's gonna just consolidate and then tomorrow opening up with a gap down all the way down towards $81. We don't know any of that. So better to wait until the price starts closing candles above this 84.72 and then add more risk to our positions rather than playing guessing games around here. At the end of the day, no one knows. No one knows what's going to happen. We're looking at it in terms of probabilities at the end, right? So, probabilistic standpoint, give it some time for it to work out, and then we can deal with it down the line. And how do you get the intraday VWAP? It's just a regular VWAP. So you can either go to the indicators and then just type for VWAP and you're going to get it anyway. So it's just a regular VWAP which we are looking at. That's it. There you go. So the other you can either do it by going to indicators, searching for VWAP. You're gonna get it. That's the intraday VWAP, or you can just go to the anchored VWAP settings and get it from there. It's gonna give you the exact same thing. A lot of questions about QQQ swing trades as well. Think we went over it before, and we are entering a seasonally not so great month when it comes to the markets. If we are looking for swing trades, we need to grab them by the end of February to first week of March when they come back down towards this 50-day moving average and tag the same. That's going to give us a beautiful entry, and we can capture at least like 30 to 40 point moves on QQQ to the upside. Those are the type of trades which you typically look for. Buying right here, we're trading near all-time highs, and which is a great thing. We're in an uptrend, all that is good. But when it comes to these ETFs, when we're buying these ETFs, we need to look for capturing at least like 30 points or at least 20 to 25 points to the upside, which means if you're entering somewhere around 525 or if you're entering somewhere around 520, we should be capturing at least like move towards 540 or 545 or 550s. Like that's what we're looking for when we swing trade QQQ. We're very picky when it comes to trading these QQQs, and that's one of the main reasons why it's one of the most profitable trades in our accounts so far. So QQQ is the largest paying trade for us until this point. So we're going to be very picky. We're going to follow that route. We're going to keep being picky. 3 to 4 QQQ trades per year will do the trick. So you don't have to chase it at this moment. No high risk to reward at this particular area. Let them come back. Let's see if they can use the seasonal weakness to correct themselves to the point of 50-day moving average, or at least towards the year-to-date AV map at around what 521 and change. If they can come there into the March, then we can pick it up from there. So that is for Qs. And there's a lot of questions about, let's see, Palantir, Palantir, Palantir. We already went over Palantir. Something much to add when it comes to Palantir anyway. So don't buy the dip. Wait for the buyers to step in. Can you repeat the time frame for QQQ? The time frame which you see on the screen, or the time frame on the trade which we were about to take? The current time frame which we have on QQQ on the right hand side of the chart is 15 minutes. And the time frame on the trade, usually whenever we take the QQQ trade, we are looking at somewhere around a month maximum. So we're looking for a month. And since it's an ETF, that's the only ETF which we don't worry about being too aggressive on the stops, because the thing with these ETFs is they are always going to go back up down the line. So even if it didn't work out, we can either cut it for a small loss, or we can just like look for You can just add it to the long term and we can just wait for them to return back down the line. So time frame is mostly going to be around a month or two, and we're only talking about shares anyway. If you want to do it with options, you can do it with options as well, but that doesn't matter. If you're going to do it with options, give yourself at least 3 months out, and that's the maximum we're going to be holding on to those shares anyway. And to anyone, especially to Josh and Adonzo, like about the 100K account, and once you see these types of pullbacks towards 520, this is where you're going to start establishing your ETF positioning on your larger sized accounts. So you can just add more to your QQQ and set it aside for the longer term and let it market perform. And while you use the rest of the funds for just swing trading stocks, which we do on a daily basis. 50 to 60% goes straight into these ETFs, and we'll split these ETFs into different things. But for now, SPY and QQQ. So it goes and wait for them to have like a steeper pullback towards the 50-day moving average. Once that happens, there's your entry. So let's see. What are thoughts on DraftKings, DKNG? Let's see. DraftKings, Digit, Coinbase. Take a look. Netflix. We'll take a look as well. It's not 50% of a 100K portfolio should be held in an ETF. It's just you need to have all the money in the markets. That's all it is. And those money much rather be in structured ETFs like money markets or any of these Spire, QQQ, or VTI, VOO, rather than just sitting in your bank or doing absolutely nothing. That's what I meant. But in order for that to happen, we need the price to get back down towards a favorable area, and maybe you can just buy somewhere around like 100 shares or 50 shares of SPY or QQQ, or 100 shares of QQQ as a whole, so you can just sell covered calls on it and convert it into a wheat strategy and make money along the way as it continues to keep going higher. DraftKings with a nice gap up. We'll see. I'll let you know, Josh. I'll let you know. Both Josh and Adonza, both of you, if you're here, I'll let you guys know. When I enter it, you can enter it alongside with me. We can start structuring our larger accounts as the year goes by. So DraftKings, the gap after the earnings, decent. But now if you go to the 15-minute time frame, same as what we spoke about via AC. Well, they're testing the 5-day moving average right now, and we'll see if the buyers are going to step in. But again, under the intraday VWAP, there's no reason to buy it at this moment. Let's see. Let them recover the intraday VWAP for the day. If they can recover it, there are multiple ways you can deal with this, by the way. If you're going to start with small positioning right here, your stop losses should be at 47.50. If you're going to start with small positions, don't start anything right now because we're still under the VWAP. You need at least a 5-minute candle close above the VWAP, and the next 5-minute candle should show some strength above the VWAP as well. When you see that happen, you can set your stop losses at 47.50 and then take a 0.4% risk or 0.2% risk. And then once they break above this $51.50, you can slowly average up on your positions and move your stop losses up towards this $49 and change. That is one way of dealing with the long positions at this moment. I don't want to short this at this rate because we're still in an uptrend. There's no reason to short an uptrend. And I don't like losing money, so I don't want to do it. So when it comes to DraftKings, wait for the VWAP, wait for the 5-minute close above the VWAP, and we'll deal with it along the way. And just like what we spoke about bros, same thing. Let them recover the VWAP, and then we can average up. No reason to do anything at this moment. All right, so this is DraftKings, and even if you're establishing positions, keep it small for now, and then once they clear this 51.30, you can average up along the way. And stop losses on the initial positions should be $47.50. If you're wrong, well, you're only going to lose like 0.4% of your entire portfolio. And once you average up, don't let your risk go past about 1% or 1.5% maximum after averaging up. So after averaging up, if you get stopped out, you shouldn't lose more than 1.5% or 1% of your entire portfolio anyway. So that should be your total risk. So this is for DraftKings, and you got Netflix and Coinbase. What's happening with Netflix? Well, under 5-day moving average immediately goes into the not ready bracket. Maybe the daily, or they're testing the ERAV VAP. Nope. Netflix, I'd much rather prefer them come back down towards this 994 area. I'm not interested in buying anything at this moment. So let them come back down because they already rallied quite a lot from 971 all the way to like almost like a 100 to 150 point rally from the lows. Let them come back down towards this 995s and see if we can find buyers over there, and then we can deal with it later down the line. Not at this moment, not right now. So this is Netflix and Coinbase. I'm just gonna repeat it. I don't trade crypto, don't trade anything related to crypto either. Coinbase looks like a downtrend, looks like under declining 50 as well. So this goes against every single bit of our rules. Maybe if they can come back towards this 235, and if you want to bottom fish this, if you want to call the bottom, or if you want to take a low risk entry for a reversal trade, maybe perhaps 235s offers a better risk to reward for a right now, because there's no indication of buyers stepping in anywhere. So no reason to chase it, no reason to call the bottom at this moment when there's no indications of buyers stepping in and on any time frame. Showing weakness, declining 50, declining 20. Well, for the last 50 days, we're in a downtrend. For the last 20 days, we're in a downtrend. By the looks of it, for the last 5 days, the 5-day moving average should be declining as well. So we don't have any indications of buyers stepping in anywhere, no confirmations of the same either. There you go, 5-day moving average declining as well. Instead of buying stocks like this, look for stocks which are actually in an uptrend, which are outperforming the broader markets. Your portfolio will thank you down the line. So just stay away from these names altogether. With these names, what I mean is downtrends all at once. Let the buyer step in at least. Wait for the confirmation. Then you'll be having more than enough time to get involved. Not right now at this moment. All right. So hope everything is clear for the day. So for the pros, I will let you guys know if I average up. And we have our price alert set at $84.72. If they can clear this, great, good for us. And 84.70 and beyond, we can average up and just move our stop losses towards the maybe right here, $81 or $80.50 once if they clear the VBAN. If not, there's no reason. Did you take positions on DraftKings? No, not yet. We are already swamped, AJ. Like we have a bunch of positions on our portfolios already. I don't want to add another new ones. So especially not DraftKings at this moment. So we got better looking positions on our portfolio at this moment. So let's just keep it. Let's just leave that position spin. UTI. Okay, this is interesting. 5 days starting to slope to the upside. Daily is in an uptrend as well. Josh, don't you have a 0.5% leeway to add to your portfolio? Yeah, go ahead, fire it up. Put it to work. $26 stop, 26.50 stop losses. If you're wrong, you're wrong. Just keep the risk for now at 0.2%. Don't go beyond it. And save the rest for averaging up on the same down the line. And this is for, yeah, just 0.2 for now. For now, 0.2. I'm pretty sure you have 0.5% risk leeway left, right, for the 2% mark. So just keep 0.2% for now with the 26.50 stops. And then as you continue to work in your favor, then complete the position to 0.5. How much more do you have? So after closing HWC in a firm, what's the current standing on the risk? Let me know. If you have 0.8 to 1% approximately, so just go with 0.4%. The only problem is we already have a bunch of 0.4, 0.4 on our portfolio right now. So just keep in mind that if all these three stops out, it's gonna sting. We are looking at a 1.2% drawdown. So either you can do this, either close MasterCard position or close Bros position and put that risk in UTI, or keep the risk in UTI at 0.2%, so that like when you combine all these three positions, if all of them stopped out, it won't be around like 1.5 to 1.6%. Pick one. That's it. So either close MA, you can add more down the line, or close Bros, you can add more down the line, and then add into UTI. So because I don't want you to have a multiple starter positions, and the starter position stoppages, I don't want to surpass around 1.5 to 1.6% of the entire portfolio. That is not even worth it to begin with. That drawdown can be completely avoided by just removing it all at once. So just go with UTI by removing Mastercard or Bros. Pick yours. Like, doesn't matter which one you remove. If it goes up without you, it's fine. You can always re-enter down the line. By this point, you should be used to stocks going higher without us down the line. So don't worry about it. It's about risk. And this goes for anyone, by the way. If you're holding MA and Bros, and if you want a positioning on UTI and wait for them to recover the intraday VWAP, no reason to get involved right now. If they recover the intraday VWAP, there's your entry on UTI. And you can just set yours. You can either remove the MA or Bros from your portfolio and add UTI instead once they recover the intraday VWAP, and go with it. Do not touch YUM at any cost. Leave the YUM position as it is. And YUM is the only thing which is positive in our portfolio at this moment. There's no reason to cut the strength and then add it to the losing positions. So we still need Bros to get back over the intraday VWAP. If they do, we'll add more. If not, we're just going to close it. So hope that makes sense, by the way. So for people who are here who have no idea what I'm talking about, when I say like 0.2% cut it here, 0.4% cut it here, we're talking about the total risk which is exposed on our portfolio. That's the amount of percentage of our entire portfolio which we will lose if we were wrong on all these trades. So what I was telling him is either close some of these positions to limit the drawdowns on the portfolio. By drawdowns in the sense, so currently we have MA open, currently we have Bros open, currently we have YUM open. So if everything stops us out, we're going to lose somewhere around 1.5% of our entire portfolio. So what I was telling him is if you're going to open UTI as well, best thing to close at least one of these positions, so that if you get stopped out on all of them, the drawdown won't be beyond 1.5 or 1.7% in change. So it's just a tool to limit the drawdown. That's it. New to your channel. Are there any good price to get into right now? MA, keep an eye out for Bros, and we have our alert set at $84.70. And if the Bros close 5-minute candles above the intraday VWAP, that's where we are going to average up on our position. And if you haven't entered before, you can set that one up as a new entry as well. And hope you got the position sizing calculator. You can just set the total risk to 0.4%. And right now, if you average up, our total risk is going to be 0.6% on this name. And just establish the starter position with 0.6% risk. So what I mean by that, again, if it stops you out, you shouldn't lose more than 0.6% of your entire portfolio. And the stop losses will be moved towards $80 if we average up. So Bros is the only thing which is near a good, decent entry price, and UTI is decent as well. MA needs more time, so let it do its own thing. And for UTI, let them recapture the intraday VWAP first, and we'll be having more than enough time to establish positions. And the problem with UTI here is the slippage which we are seeing on the 30-minute time frame. It's not going to give us an exact proper location on the VWAP either, because some of the candles are actually missing on TradingView. So if any one of you use softwares like TOS or stocks charts, let me know where the VWAP is. That's going to be the actual location on the VWAP. Don't go off on the VWAP which you see on the TradingView for today. Where do you find the risk calculator? I just shared it in the Zoom chat. You can just check it out. Right, so at this point, I like Bros better if they get back over 84.80. If that's not happening today, there's absolutely no reason to open anything today. And YUM, I'll let you know if I start trimming, and the trimming will only begin once they hit that 150 to 151 zone, especially we averaged up. And I, at this point, don't want to be way too aggressive with this name by starting to trim, but again, with the way, with the seasonality standpoint, I don't want to leave a lot of money on the table either. We'll see. I'll let you guys know it's a good looking name. And this thing, it is good looking. I have a lot of conviction on this one. And it's not just conviction, it's backed up by the trend as well. But it's a 2 year base, what they have. If you look at the weekly charts, you can see that's almost like a from 2021 to 2025. That's almost like a 4 year base, by the way. They try to break about this 442 for 4 years over and over and over again, rejected, 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 and finally got through it. Longer the base, stronger the breakout, and that's exactly what I'm expecting it to see. Maybe perhaps towards 160s, 165-ish zones will be a nice spot to close the entire position. But until that happens, I'm willing to hold on towards this. Let's not build castles in the sky until we see that happen. But we'll see. There are decent probabilities of this happening. So that's why we are still in this positions to begin with without making any changes. We'll see how it goes. See how it goes. And if it happens, it's going to be one of the best trades for us for this year so far. So ticker symbol which we're talking about is YUM, and the good entry price for this one was somewhere around 145-ish zones. If you haven't entered right there, well, don't chase it right here. And what can I say this guy? Yeah, exactly. It's no point in it. If it happened, it's the same thing, right? If my grandmother had wheels, she would have been a bike sort of thing. So, well, would have, could have, should have. Not going to change anything. So all we are doing right now is just waiting for bros to set up. If it happens, it happens. If it doesn't, it doesn't. There's no, if the bros didn't set up, there won't be anything new open for today. And Expedia, Josh, you're asking for it. And today looks like we got an opportunity. If they can clear the intraday VWAP, then we can start establishing initial positions on that as well. And Sharon, you asked for any new positions. Keep an eye out for Expedia as well. Browse in Expedia. If the Expedia can close this 15-minute candles above this VWAP right here, above this 203.80-ish zones, well, got a potential with stop losses at maybe perhaps $200. You can just take it. All right, so we went over all the swing trading positions that we have, and we went over all the swing trading positions that you can potentially have down the line. And that will be all for today. I don't want to keep you guys waiting for so long when we don't have much going on with the broader markets either. Don't overtrade, manage the risk. And if I make any changes to MA, if I make any changes to pros, if I make any changes to, if I add new positions to Expedia or UTI, I will let you guys know. And you know where to find it. It should be under the small accounts tab, and go and I'll update it right there. With that being said, have a great rest of the day, and I'll go enjoy my coffee, and you guys go enjoy the rest of the day doing whatever makes you happy. All right. Have a good rest of the day. Take care. Bye bye.